Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on today's show. We're talking about that rotation that we experienced yesterday. If you're not FAANG, we don't care about you. That's what the market said. FAANG was hot. Everything else was not. We'll talk about that. We'll talk about some obvious moves, or moves that seem obvious in hindsight. Stocks like LAKE, which blew away their earnings report. Duh. Seems obvious now. AMC had earnings 5 below, popped on their report. We'll talk about all these names. We'll take some questions from our chats, both on Benzinga Pro, on our pre-market site, and on YouTube. And if you're on YouTube, hit that like button, subscribe, tells YouTube that we're here, and it helps us get more viewers. I'll bring Joel in now. Joel, give us a quick update here on what happened in the overnight session.
Good morning, traders and investors. Very nice overnight range. Rally off the 6 p.m. open took us up to 27 and a quarter. That's the area of your high close of the rebound at 26.75. And then lurking above that, the double top from Monday and Tuesday, 32, 31, and 31 and a quarter. That's your gateway to 32.58.50. That was your February 25th high. On the downside, we just got tons of support, just over 31.90. That was your low on Tuesday, your intraday low on Monday, hit 31.93. So bouncing around, I'll talk about the reason for that. And then when Triple D comes on, we have crude in the red by 84 cents at 38.11. Gold, tell myself to buy it when it gets under 1,700, and I don't. It's up $10 at 1724.80. Silver clears $18, up 31 cents at 1810, and Bitcoin flat $150 range in that at 9,805. And one good thing about bringing Triple D on, even when he's taking some heat, he's in a good mood.
I'm always in a good mood. A little bit of heat here today. My overnight portfolio, which I thought was diversified, apparently wasn't diversified enough. So I threw a little bit of trash in there just to give it a little bit of color overnight. You don't want any trash in your overnight portfolio here tonight, folks, because trash is trash. And what we're talking about is the airlines. We're talking about the banks are coming back a little bit, but you're seeing a lot of stocks, the REITs and the airlines, the cruise lines, all really getting hit here again. So it is a repeat of yesterday. I don't know. What are your thoughts here on this market? Because now, it felt obvious on that day that, the Friday when I was calling for the top on all these things, you felt like upside capitulation. It turns out that it was indeed upside capitulation. But now you're starting to pull off. So now you're off significantly off these highs. So if you want to do the dumpster diving, you get to a 50% retracement of the breakout moves in some of these things. Maybe they get interesting. I don't know if I want to do any of this dumpster diving in the stocks and what I'm talking about. The airlines and the cruise lines, obviously the revenues are down significantly there. But if you wanted to, is there some levels, Joel? Let's talk some.
I don't know. We were debating that on the pre-market show, and I just kind of like American Airlines. I think that I don't know. I'm more comfortable with the numbers on that one than anything else. And you were talking about the 50% retracement from the actual breakout, and you're there. You're right there right now. For me, I kind of got to take it from that 8 1/4 low and up to, that was basically a 14-point move. So for me, for long term, I would look at $15-16. If you want to step in here a little bit early, that $16.5, $17 level, maybe you make a double bottom. Maybe you give something to lean on here. You are not going to get that double bottom today as we are trading. Well, we're trading above yesterday's lows. So see what happens. If you want to own this, you have to own it. 1761 was a low from yesterday. 1780 was a low from June last Friday. So not a bad point. I thought I saw something that the airlines are going to lose 82 billion this year or something.
Sounds investable, right?
I mean, you're the stock picker. You're this. I just try and buy the index, because if I'm buying the index, then I don't have to worry about all these, different stupid stocks. And
what
then
index? You just buying S&Ps?
He's buying the Jets index.
You're buying the Jets index?
No.
With all the other Robinhood traders.
Yeah. So, when you look, you see Microsoft, Apple, Amazon, Google, and Facebook. I mean, right there, what's that? 15% of the market. You're owning the S&P. I have the one with the, that pays a little bit higher dividend, so a little bit more cushion, or has the higher dividend stocks. But I don't have any interest in these at this point. I just say that that's a big area of support, and we're opening right on it in American Airlines. So you're going to find out whether it's ready for a bounce very quickly.
I think there's going to be a bounce in here somewhere. I think that's all it is, the bounce. But trying to call where the bounce happens on these is tricky. And again, looking at a lot of these stocks, it's still, what are you buying? It's not like these are good, solid stocks right now. These are companies that are struggling big time.
Uh-huh.
So that's why, I haven't really done any of the, for my longer term portfolio, I haven't buying any of these stocks. I'm not saying you can't, but have yourself an out. Don't get stuck with something and then all of a sudden it gets really ugly. I mean, people were chasing Chesapeake, obviously goes bankrupt, and you're buying it up at $60, $70 thinking, oh, there's going to be they're calling the greater fool theory on CNBC, which I agree with, thinking there's going to be another fool that'll come and buy it from a higher price than you. Well, that worked for 2 days and now you're significantly down. So I always say buy good companies when they're on sale. I'm not so sure about buying struggling companies when they're on sale. Excellent. So what are these good companies that are on sale?
I don't know.
The companies that I was talking about on yesterday morning or 2 days ago, I was talking about actually Take-Two. Remember I was talking about Take-Two, and I said that day, that was a Friday, I said this is going to be down $2-3 in the morning, and it was trading at 126. It went down like 124, and then it caught the bid. These are companies that are firing on all cylinders, and all of a sudden they're showing life. So on pullbacks here, these are the kind of companies I want. I went long Spotify again. Why? Because Spotify didn't. So I was long it, and this is just a trade, not investment, swing trade though. So I don't plan on selling it. At least not. Well, who knows? If it turns, but I don't have intention of selling it right now. It looks like it wants to break out over 200 to me. So you look at where it's went. It had the big move. Consolidation. It's in consolidation station right now. So I can define my risk. I bought it at 180, saying if it gets below that 175, I'm going to stop myself out, and I'm going to try to get a look at the upside. So I bought, I think, at 180.5 or something like that.
Another very bullish thing about Spotify is we're on Spotify.
There you go. So whether we've got the pre-market prep pop on Spotify there too. But I mean, this is something that is a growth business. This is something that's growing. Is the valuation extreme? For sure. But it's not saying they can't get more extreme. I just think these multiples like to expand in companies that are growing. And Spotify's firing on all cylinders right now too. It's just the chart. It looks good. It's in consolidation station. It looks like it's digesting the move from the big signing there. So gets up over 200, he'd be in full breakout mode. So I'm keeping an eye on that one too. Yeah,
it's flat on the session. Old-time high, you hit that kind of early in its IPO. That was 198.99. Your recent high is 196.75, just kind of flat here today. But you're right, it had the big run up, the sell-off, a couple days of being quiet, and then a resumption. That's what you had in a lot of the big stocks, Microsoft, Apple, Amazon. They just kind of sat there. Yeah, FAANG.
It came back hard yesterday. FAANG is the trade. Apple breaking out to new all-time highs. Has it continued? I'm still long Apple, full disclosure, in the long-term portfolio. It is continuing to fly here this morning. Apple is up another 5 sticks. So you're seeing this continued rotation into FAANG. Amazon, which I own Amazon, the long-term portfolio too. Again, buying these companies on the dips, good solid companies. Yes, the multiple's high in Amazon, but come on, you got to say this is, the biggest retailer in the world here now. People have got a taste for online and they love it. And I think even if we get out of this lockdown, which we know we apparently are coming out of it for the first time, even if we have to, if we stay out and the reopening goes well, I think Amazon still does well. If for whatever reason the reopening doesn't go well, looking at Texas, and when they have to do some type of, second lockdown, Amazon will benefit from that as well. So I think heads, Amazon wins. Tails, Amazon wins. I think Amazon's going to 3,000. I am long.
Yeah, up 35. It had to run up into earnings. They slammed it on to earnings. And then I think you bought it the second day after I put that double bottom.
Yeah.
In, so
yeah, I looked as exactly. I was looking at the day, May 1st and May 4th. So I had my eye on the 22.58 low. I'm trading it here on the Monday, May the 4th. And I'm like, okay, it's holding. It's holding that low. So that's when I struck, and I bought around 22.63. I bought a double size position, half for a trade, half for an investment. I sold the trade portion about 60, 70 points up because the scalper blinded me, but I said I'm not going to touch the other half. And so here's a trade that is potentially turning into an investment. Me and Spinner were talking about that yesterday on the show. Spinner was talking about it in the chat that, and I had mentioned it too. It's okay to make a trade. They say never let a trade become a long-term investment, because so many traders get down in the stock and say, I can't sell it now. And then it becomes the long-term investment because you're down in it. But I'm going to say, if you're up in it, you can absolutely make a trade become a long-term investment. And here's an Amazon. I kind of had part of that designated investment, but if it would have taken out the lows, I might have, turned around and hit the bid. So, you can protect your capital in your long-term portfolio too, in a lot of cases as well. So here's a case where it gave me a nice setup, and I've let the trade turn into a longer-term trade and potentially a long-term investment.
all right, we're ripping here. We're up 12 handles
Yeah,
right
we are.
back. And I just wanted to mention, and I mentioned this yesterday, rollover. So today is really the last official day, with the June being the front month contract. And tomorrow you'll be rolling to September. And when you see this, the volume is not equal yet, but it will shift. And like I said, I'll trade the June through Friday, just to be consistent with the numbers. But there's vacuums, because if you're long the June and you want to be long the SEP, you got to sell the June and buy the SEP, and vice versa. So there's a lot of spreading going on here, creating these packets in the S&Ps. And you can tell, I mean, we've already had a 37-point range, which is pretty good, and went up, straight up, came straight down. Now we're going back straight up again. So very, very difficult days to trade. I've just observed that over the years, just a little bit more vacuums. Things will really settle down on Monday, but I just wanted to mention that rollover once again.
So TAC is the trade here this morning. That's the taste of it, what everybody wants here. Peers this morning anyways. Whether that continues or not is still to be determined. We know the rotation here is violent. So you got to respect the rotation. I mean, this is what this market is. And what do we mean by rotation? When money is flying out of some stocks and flying into others. And again, the airline's very weak here today. New IPOs you were talking about on the pre-market show, Mr. Israel. And a lot of those are getting hot, especially the tech ones. Where do you want to go there?
Yeah, so there's a number of them, and really I've just noticed that the IPOs that are getting some kind of media coverage are the ones that, because there were always like smaller IPOs that don't get a ton of coverage, like smaller healthcare, biotech names that just, kind of fizzle. But these stocks like ZI and VRM and WMG, Warner Media Group, and I guess this Nikola reverse merger IPO, I guess, like, I'm going to throw that into that group as well. So
sure.
These IPOs that have gone public in the last week or two that are getting press coverage are popping. And
these are growth.
There's
again,
one more on that list I want.
Yeah, you're looking at companies that are just starting out.
Well.
And what's that, Spencer?
DUO as well.
What was that? I still missed it.
DUO.
DUO?
Yeah.
Okay, I don't know that one at all.
Shout out to Jeremy Newsom. I'm not sure if he's up this early.
I don't know what the hell that DUO thing did. That was insane yesterday. I just brought it up.
Jeremy mentioned over the weekend what we thought of this Zoom info, and I almost just wanted to buy it because it had Zoom in there.
Yeah.
That was my first instinct. And then it has all the buzzwords: subscription-based software as a service company, sells access to database of information about people and companies to sales mark. I mean, it's got all the buzzwords in that one. And yeah, and boom, great call.
That's what this market likes. It likes buzzwords, and it's simple. I mean, you look at this DUO, and actually,
well, all right, my mistake. Duo did an IPO like the IPO did back in.
Anyways,
still,
there was somebody. I did see an actual tweet on this. As I'm remembering it now, and somebody was saying, "Oh, we got traders that are hearing FAANG's hot, so they went and bought FAANGD, FANGDD. I have no idea what the hell this does, but." I mean, it is. We saw they had to delist ZOMM because people kept confusing it with Zoom ZM. I mean, it's that dumb. Like there's so much like people who don't know what the hell they're doing out there that they think they're buying Zoom, what we're on right now, and they're buying the wrong stocks. I actually delisted the stock for that reason, which is unbelievable. So I mean, there's a lot of people who are doing a lot of weird things. So that Zoom info trade. Just because it has Zoom in it, guaranteed, it gets hot because of that. Just because it says Zoom, and people probably think, oh, this is Zoom, I'm buying that one. So anyways, why it's popping here this morning, it got the Kramer pump last night on CNBC. Nice. And I traded this last night off of this. Kramer was talking on CNBC, and the stock, somebody called up. So what do you think of Zoom info? And he said, and I don't remember exactly what he said, but so don't quote me on this, but he said that they priced this thing too low and this thing's undervalued. And when he said that, the stock went 51, 52, 53, 54, 55, 56 bucks. It literally went up 13% in the next 20 minutes, all because of Jim Cramer. It wasn't doing anything for the 2 hours after hours. It wasn't doing, just chopping around. As soon as he said this is undervalued, it had a nonstop bid for the next 20 minutes, driving it up to 56 bucks. I bought some stock, and then I flipped it out for a point, and I thought I was doing pretty good. I was like, well, I sold that way too soon. I did not anticipate. As soon as he said it, I was like, I'm lifting offers. So I bought some, I think 50, 40, and 50, 50. And I was able, and I'm wiggling out some of 51, and then I'm like, I'm going to wiggle out some a little high. I got the rest of it like 51.70. The thing's 52, 53, 54, 55, 56. I'm like, are we this nuts? Because Kramer gave it a little bit of love. We're going to buy this thing up. I mean, yeah, that's where we're at. We're continuing. And you know what? It's all air above here. So it can continue. There's people that got this. Kramer said buy it. And whoever says retail can't move stocks did not watch Zoom info last night, because that's not algos buying off of Jim Cramer's, comments.
There might be some algos.
Very sophisticated. Maybe they're the first ones, but that is continued buying by people who are literally watching CNBC. They're new to stocks. A lot of these people are new to stocks. They don't know what to buy. Jim Cramer says this one's undervalued, I'd buy it, and they buy it. And that's, you're seeing CNBC move stocks so much. And that's because a lot of traders are new and they're still learning and they don't know what they're doing. So they're going to trust, the only name. Like if you're just getting in the stock market, you don't know Dennis Dick, you don't know Joel Elconin, you don't know a lot of people, in the markets. You might not know even Carl Icahn. You probably heard, if you're like just in a different industry completely, let's say I'm getting my first taste of stock market. You've probably heard of Warren Buffett. You've heard of Bill Gates and that, but stock market personalities, you've probably heard of Jim Cramer. Jim Cramer is very popular. He's well known. So out of like TV personalities,
he was in Iron Man. He was in Iron Man. Don't forget that.
So if I'm just saying, if you don't know anything about the stock market, you've probably heard about Jim Cramer. So if you were just starting and you go, oh, watch this Jim Cramer, I've heard of him, and I've never really followed him, but I've seen him. He's fun. And you watch him, it must be like, okay, well, I'm just going to do whatever Kramer does. And right now, he says something, starts going up. It's like, I'm just going to follow Kramer.
What was the spread when you lifted that? What was it? Was it
50 to 50-50? I lifted it 50 cents higher right away. I mean, there wasn't much stock there. I tried to go a couple levels to try to get some stock. There was like, 800 shares, 700 shares, and you're trying. And I'm probably fighting with a couple, I don't think I'm fighting with an algo, but I'm fighting with a couple other traders that are pretty fast too. So trying to grab it, because it's probably going to go. I mean, sometimes Kramer says something, it's not going to go. It's not going to move much. But a hot little IPO like this, when he says some little, hot little thing, and he says, I'd buy it, this is undervalued, it's going to move. You know, that's a no-brainer. Like if he says, you know, when he talks Tesla, because it's a widely followed stock of Tesla, you know, every time he talks Tesla and says this thing's going to 1,000, it goes up, you know, 5-10 points on his comments because it's so widely followed. It has such a retail following. So stocks that have a really big retail following are going to move more off of a Cramer, you know, commentary. So it was predictable that this would move off of it. I never predicted go up 13% on Jim Cramer. So if you're wondering why Zoom Info's up, market helps it a little bit. It was up 13% last night when the market was just basically flat, all because of Cramer.
All right, let's see. Let's get a couple earnings stocks in here, and maybe AMC should lost more money because then it would be trading even higher than it is.
AMC?
Yeah.
Okay. It's coming off the highs already, is it not, Joel?
I actually want to
give us the numbers.
I want to wait on that for a second because Starbucks just came out with some prelim numbers here. So
okay.
What do we got? Starbucks breaking news. Benzinga Pro. Starbucks
here. So they had an 8K out this morning. Prelim Q3 adjusted EPS guidance. They gave a range of a 55-cent loss to a 70-cent loss versus a 16-cent loss estimate. So not great on that. They see a sales decline of $3 to $3.2 billion, operating income down $2 to $2.2 billion. I guess almost all their stores in China are open and 90% have returned to pre-pandemic operating hours. That's great, but what about their revenue? And so not great prelim Q3 numbers here for Starbucks.
Well, this is their guidance. This isn't even the last quarter. This is just what they're guiding for going forward.
This is the Q3 is this quarter, so they're guiding
coming up.
Yeah, they're guiding for this quarter.
I mean, is the market going to start caring? Tell me when the market starts to care about fundamentals. And has it started? Did it start 2 days ago? Because it kind of looks like it started 2 days ago. And if it did, there's going to be a lot of bad numbers to come from a lot of companies. This market has not gave two hoots about any fundamentals, any missed numbers. They were just buying the pullbacks on everything. Maybe that happens here again. Maybe the Starbucks dip just gets bought because it's Starbucks and everything's going to be okay. We're coming out of this lockdown and this is just a 2020 write-off year. But these are terrible. This is terrible. But again, has to be expected, doesn't it? I mean,
right.
You've got, everybody sitting at home. Well, of course, Starbucks sales are going to go down to a certain extent. Half the stores were closed. So they're just trying to get them reopened and people are still spooked. So I got to think a lot of that. I would have thought of a lot of it was priced in, but after the Lakeland Industries report last night, when I watched the stock go up 54% because they make protective wear and everybody was absolutely shocked that this mask company, protective wear company, beat the numbers. I mean, it's maybe nothing is priced in. So let's do Starbucks first, then we'll go to Lakeland.
You just hit 80-20 and you're trying to bounce here. So I'll look at $80. You had that low at 79.97. So if it holds 80, maybe you get a chance to rebound. If you get anywhere near the close and the low from yesterday, I'd even, if you really wanted to wiggle out of this, 81.76, that fills the gap from yesterday. So you might need to be a little bit of hold ahead of that. Big rally here. I mean, I don't think you need to step in and be a hero today in this one at $80. And the reason I say that is they'll let the dust settle for 1 or 2 days. I think you might be able to see this thing. I don't know about today, but there's a pair of lows at 78.40. I mean, I try and hold on from that. I mean, they came out, they just gave you bad news. I just don't see, rushing out to buy it today.
Well, it's worked though, Joel. It's worked every time to buy right off the hop. I mean, this is what has happened the last 2 months. It's worked every single time. You're buying companies on bad news. I mean, the Hewlett-Packard quarter was a disaster. It sat down there for 2 days and then got it all back. I'm long HPQ. You look at it's worked again and again and again. So it's hard to just say it's not going to work. I mean, I'm not going to sell it in the hole. And you got an 80 breakout from a technical basis. It's retesting support. Maybe they do shrug it off. It all depends on what they're willing to shrug off. Is Texas, the news there that, the reopening isn't going that well? Is that a game changer overall? Was that the reason, the catalyst that we really turned yesterday, going back into some of the lockdown stocks and selling the reopening stocks? Maybe that was the catalyst. Some of the reopenings we've been talking about Phoenix that hasn't been going well. So, if the reopenings start to not look good, then all of a sudden it becomes very scary to have any of these stocks. But I don't know if it's going to, we don't know how that's going to, nobody knows really, how this reopening is going to play out for every state. Yes, there's going to be ups and downs. It's not going to be smooth. It's not like there's going to be no cases, but is it to an extreme level where the market starts to get concerned again and then starts to seriously sell some of these companies off if they get scared of a second lockdown? Maybe, but day one, Starbucks, I don't know.
And Dennis, and here's a thought. Think back to what Barry Diller said last week, right? How many companies are going to come out and whether it's preliminary numbers or not, and just set the bar so low so that when they do report in July and August, they beat the low bar, right?
Well, they're good at that. That's what they do.
Right.
They set the bar. Exactly, Spencer. They've set the bar, and we're talking the Expedia chairman there.
Right.
They've done that already. They've set the bar low, and maybe Starbucks here is now setting the bar low.
I think so.
So they can come out in the next quarter and beat that low guidance. I mean, this is the game that it was very, he explained it, and we know it. I mean, but here you have a chairman actually saying this is what these companies do. They set the bar low, they get hit a little bit on the setting the bar low, and then when they come out and beat the bar in a month or half when they actually report earnings, then the stock's going to rally the hell out of it. So there's some truth to that too. So Starbucks just playing the game right now, and maybe this is a really low ball number so they can come out and beat it at a later date. Maybe. The question of the today though is, do you buy the dip on Starbucks? I think it depends on how heavy you are, first of all, in these kind of stocks. Is it a good company? Absolutely. Is it struggling in this environment? Absolutely. So a lot of question marks there. It's intriguing, but I don't know if I'm coming in by that.
Well, all right, so here's what I would say. If you wanted to buy Starbucks before and were too, for whatever reason, then now is your chance. Congratulations.
You're getting a dip, but it's not even a big dip. We're down 2%. So it's not like we're down, American Airlines, people are looking at it, and obviously the stock's bounced back here a little bit from the lows here. All these things were getting smacked, but I mean, even Spirit Air, you can look at that one and it's $21. And, so now you're coming off the highs here where you're getting a significant dip. I mean, American Airlines is 18 when it was almost $23. So now it's like down 25%, 30% from the highs made 3 days ago. That feels like a dip. But Starbucks obviously didn't have that kind of move, so they're not going to get that kind of dip there. But there's support from 70 to 80. So once you get into the 70s,
a lot, yeah, yep.
I wouldn't be shorting it. I'll say that. I'm not going to short in the hole. Can we go to Talk Lake? Because here's something I would do today. I don't have any position on this. And I should have shorted it last night when it was up to 25. My jaw was just dropping. So, okay. Give us the numbers for LAKE. They were really good. I mean, blew it away. Give us the numbers.
I'll pull it up in the pro here. So reporting after the bell yesterday, Lakeland Industries Q1 EPS $1.07 versus a 15-cent.
Blew it away.
Sales of 45.6 versus $27 million. So they blew. You don't often see beats of that nature, but they blew away the estimates. And I guess if
you saw it in Zoom. Zoom blew it away, kind of to that nature. This is, we were saying Zoom was a big earnings beat. This was a huge earnings beat. This might have beat the Zoom earnings beat. But let's be honest here. The protective garment maker, they make masks. They make protective equipment. They make everything that was needed in this last quarter. This is going to be their best quarter in the history of the company, I would think. So I thought, actually crossed my mind, I'm like, Lakeland's going to beat. But how much of it is already priced in? Apparently none of it was priced in, which is just, I actually thought it yesterday. I'm like, well, it ran up $1 ahead of the numbers. They're going to beat. The market knows they're going to beat. They're going to beat big because they make protective gear in an environment that in a world that needed protective gear. I never fathomed that they would buy this thing up 50% on this report. So if I was long Lakeland Industries, and I'm not, and I wish I was, and I wish I would have just, did the simple trade, buy another report because they're going to kill it, you would have rocked it. You would have absolutely murdered it. 50% you'd be up as of last night. It's already coming off the highs. I would hit. This is another one like the Gilead trade, which I had right. I feel convicted on this. I'm not saying it's off from the highs. It was at 25. Could it go back there and test it? Maybe, but I think this thing opens up. I think when you look at this 2 days later, it's significantly lower. So chasing this after the one good quarter that you knew they were going to have because of COVID, I think is insane. I think if you're buying this at $24, $25, thinking, well, this is a turn and Lakeland's going to be killing it for quarters and quarters and quarters. Maybe if we never, ever get past COVID again, they continue to rock it. But everybody else is making, protective gear now too. So competition all over the place for them. They're the benefit of COVID, the pure benefit. I was playing this back in February and March because, with those lifts, we talked about Lakeland. I just, I had quieted down. It was kind of over. And then all of a sudden now it gets the pops back into like the February, March highs when COVID was just getting started. Sold to you.
Yeah, it did get to 24.97.
Insanity.
Yeah, and then some sellers came in, knocked it down to 21.40. So then you just made another run at 24 there. I mean, if you're a gap buyer and you like this and you think it's going back to that pre-market high, which I think it's going to be tough because when you look at the daily, you had that one spike to what, 28 even. And a lot of people, that day it opened to 27.25, hit 28. Made a low at 17.24, closed at 21.11. So there's a lot of people here looking between 20 and 28. Like, I want to break even on this trade. If I could just get out at 24.5, I'll be so happy. So definitely, especially when it goes up that quickly and down that quickly on a big volume day. So I'm with you on this one. If you have to, play it from the long side. Boy, oh boy, it loses 21. I think the pace of decline really accelerates.
I mean, every time it popped back, even in the COVID days, the pops were all selling opportunities. Now you get the big last gas pop here for all these protective gear makers, and APT is getting a lift with it big time here as well. Going to report, obviously, coming up, I believe, too, but 1250 has popped up too from 1067. So the sympathy move here with Lake. Wow. I think it's a ring the register opportunity like big time.
Okay.
like ring the register.
Well, think about this.
If you're long it. And I might even short it at the open. We'll see.
We'll listen Ticker Vault with some good info on the YouTube chat. 20% short interest. So keep an eye on that. This is
squeezing them a bit, which is who the hell is short Lakeland?
This is a low float play. All right. Watch out. It's a low float play, high short interest. It can do
squeezing them a bit. And we did. We saw that. We saw a squeeze. I know what I might be 21% interest after the open. We'll see. I don't know if anybody got that.
I did.
All right. I haven't decided on that one yet, but I'm interested in the short side on that. Okay. No position yet.
2 minutes before we're going to grab our guest. Let's just quickly cover AMC since Joel mentioned it here. They reported after the close as well yesterday. And no surprise, they lost money. They lost $2.22 per share, which is worse than estimates. Sales also worse than estimates of $941 million versus a $951 million estimate. And they said they're currently planning to reopen almost all of their U.S. theaters in July.
This feels like Macy's Part 2.
Yeah.
I think, you were saying that, Joel. Macy's with the big pop yesterday because why was Macy's? Oh, they got the credit and they got some stores reopening or something.
They also gave prelim numbers.
They faded the hell out of that pop and it went straight down. I think AMC is the same story here. Again, this reopening trade has been long in the tooth. You're getting a pop here on the reopening in the movie theaters is 2 to 7. You're buying it now. You're late to the party. Johnny come lately often loses money. Sold to you.
You did pop up to 720 twice. So if you want to target on the upside, long-term trend in this, like since 2017, this has been a downward trend, accelerated during the the COVID-19 crisis. I mean, over the last year, I can't, been to the movies maybe once or twice. I mean, it just, there's a change going on, and these movies are just going to go, right, Mitch is saying, straight on demand. And also, what are you going to do? Go to theater? I mean, the capacity, are you going to sit 6 feet away from everybody? Are you going to run up and get popcorn? I mean, the whole dynamic has changed here.
Think about the uncomfortableness sitting in a movie theater, at least right now. When you hear, there's 100 people around you, even if you do the social distancing, there's still 50, 60, 70 people around, which isn't good for them at all. But then, you're watching your movie and you hear coughing, and there's always somebody coughing in the movie theater. Every time somebody coughs now, you'll be like, ugh, here I am in this room. I kind of uncomfortable. Is it an enjoyable experience? I mean, inevitably is going to be some people coughing. The same thing with restaurants. It's an issue. I mean, drive-through, it's not an issue for, but when you're sitting in a restaurant and people are sitting at a table 6 feet away and the guy's hacking up a storm, maybe he swallowed wrong or whatever, it's going to be that uncomfortable feeling. So that's going to be there for a while.
Dennis, I went to a restaurant yesterday.
Where'd you go?
I got peer pressured by Luke into going.
Where'd you go?
Cadillac Diner. I've never heard of it. I've never heard of that. It's by the office.
Well, it's a local diner down here, but
how was it?
I didn't want to go.
You didn't want. So Luke pressured you in there.
I don't want to go, but Luke was like, "Come on, let's go out." So okay, it was the first.
Did he treat at least?
How were you comfortable in there? Did you feel like, were you thinking like about the virus at all? What was your thought process in there? I'm just curious.
We got there. There was one other table that was full, and we left, and there was still one other table that was full, and that was it. So there were 2 tables that were full in the entire restaurant.
Before we bring in Ivan, I just want to give you one interesting anecdote on that. Emily was covering the reopening of the restaurants in this area for Bloomberg. Mm-hmm. And she was going to all these places, and she calls and she goes, "They're just not busy. I want to go somewhere that's busy." And I'm thinking to myself, well, maybe people aren't going out to eat, right? Yeah. And so it's gonna take a while. But she really, I think, Stage Deli, I think, was pretty crowded. But
let's get our guest thoughts on this. Ivan Feinseth is a partner and CIO at Tigress Financial Partners. And Ivan, good morning. Can you hear me? Oh, well, we see a video of some kind. Ivan, are you there? All right, having problems.
Is he on the floor?
No, that's just a picture.
Looks like the floor.
Ivan, I think we're having some...
I see Ivan there. He's right in the corner.
Yeah, right way up there. No, Ivan, having a hard time hearing you, so maybe change the audio settings on your computer to switch with Zoom or... but we will get
corner button, a little mute button too.
Yeah, well, no, he's not muted, so it must be an audio.
Oh, I see him not muted.
Yeah. So
is he? Do you have his phone? Can you call his phone from there?
Yeah, I'll have to connect with Ivan.
How about now?
Hey, Ivan, how you doing?
I don't know. I got my settings are a little messed up here.
All right, Ivan, you're in. So yeah, I see your video here, but I don't actually see your face. So
we're gonna get Ivan on video, and you.
Well, I just see that picture.
Yes, I know the camera's not working for some reason.
All right, Ivan, you're in New York. When the restaurants reopen, are you comfortable going out to eat?
Well, actually, I live in New Jersey, and I see a lot of the restaurants around me are either building patios, decks, or they're putting tents and tables and chairs in the parking lot. So yeah, I think they're going to allow outdoor dining, which is great because it's the summertime. So the answer is yes, I will go. Okay. I think you will see the places packed. Every time we see people have the opportunity to go out, they are going. Maybe even too much so. You see pictures of people out last Memorial Day, and people weren't social distancing, and a lot of them were not even wearing masks. So the big thing will be people are going to go out. People are tired of being home, so there's a lot of pent-up demand. The big tell will be if we do get this resurgence in new infections, this fall, that will cause a panic. However, if things continue to progress the way they are, this reopening process is driving the economy forward and the market higher, and that will continue. So the slight pickup I think that we are seeing in new cases has to do with the fact that there's a lot more testing being done and available and being done. So it'll be about new cases, but there's no question that there is pent-up demand.
I think specifically new cases in the hotspots, because I was reading this morning that 14 states are seeing their curve go back up right after Memorial Day weekend. So I think 14 states are at a record 7-day average of new cases. So I think it may just be how bad it gets in the hotspots in California and in New York City, in that area. Ivan, you cover a lot of stocks. You cover some stocks that are more affected by this crisis than others. On a company like Norwegian Cruise Lines, that's in your coverage, how do you how do you do research right now? How do you put a rating out there and in this kind of a crisis where data is hard to come by and the models are out of
You,
whack?
you got to look beyond this year. Unfortunately, this year is a lost year for them. 2019 was a record year, and following 2018, and I was with the CEO of Norwegian in early 2020 before the pandemic broke out, and they were looking forward to a record year again in 2020. Unfortunately, through no fault of their own, their business has been shut down. Their stock plunged to all-time lows. But people want to cruise because they are seeing booking demand as soon as windows open. Some windows have opened and closed for this year, but 2020 is showing strong demand, better than 2019 at within normal price levels. So they're not heavily discounting. So people want to go on cruises. To give you some numbers, in 2019, 30 million people went on cruises, and there was an estimate that 32 million were ready to go in 2020. That will just get stretched out one year and go to 2021. You can see the reaction in the stock. It has run up. Maybe it's gotten a little ahead of itself on the enthusiasm, but all three of the major cruise companies, including Norwegian, raised plenty of capital to carry them through. Norwegian can last 18 months from May if they don't sail at all. And I think you will see the window as open as early as, let's say, late August, early September, where they start to phase in ships, to as late as maybe March. The earlier the better, but it will resume. And what holds the cruise industry back is a limit of demand, not excess. There's not excess demand. They grow. The industry grows as fast as they can add new ships. And they can add only a few ships a year because there are only a few places in the world that build them, and it takes a couple years to plan and build a ship. So, and there's demand for the big mega ships that are 4 and 5, hold 4 and 5,000 passengers, and small, more intimate, ultra luxury cruises that are 500 to 1,000 passenger ships.
We're on the line with Ivan Feinseth, partner and CIO at Tigress Financial Partners. Taking a step back here from the individual stocks here, veteran of the markets here, could you just tell us about your late February and early March? I know you've been a long time bull of this market, a long time supporter. I mean, there had to been some tough phone calls with people, and I just wondered if you could just, shed a little light on, what you dealt with during those times and what you said to people.
Oh, absolutely. The toughest thing was to keep people in the market, to do what I view was the right thing, and that I spoke about that in past pandemics, of which there have been 11. Within 6 months, 7 out of 11 times the market, recovered within 3 months. 11 out of 11 times the market recovered within 6 months. You have to look beyond this. I tend to lean optimistic and bullish, but you have to look beyond these near-term problems. And I mean, it was a panic, and I always say nobody makes money panicking. And I've never met a successful pessimist. So it was hard to keep people in. But then, I had one client, she said to me, look, she went into the market right before the downturn, the big downturn. She retired, went into the market. She said, I don't know what I'm going to do. I can't take it. And I said, you got to believe, you got to stay in. And as we've seen, the market has come back really nicely. And a lot of the tech companies I follow, the leading tech stocks that I recommend, are at new all-time highs. The NASDAQ is at a new all-time high. And it's not this disconnect between Wall Street and Main Street. It's that the market is forward-looking. And I believe the stock market is much more accurate at predicting economic recoveries than the bond market is at predicting recessions.
What about this and just talking about this bankruptcy trade, and I know you don't cover some of these stocks, but I just want to get your thoughts here, where we saw stocks like Chesapeake Energy, which was teetering on bankruptcy and going from $12 to $80, and now obviously announcing, and the stock's back at 20. Hertz, which is bankrupt, going from 80 cents to $6. What is the pricing action that's causing something like that to happen? What are your thoughts? Like, I think it's just, retail getting excited and just buying anything. But what are your thoughts here on this bankruptcy trade where these stocks are going up so much? WLL was another one going from $1 to $3.50. The company's bankrupt. I don't understand what the prospects are for, being a buyer here.
I think that everybody likes a bargain. People look at these stocks as like options. And, it is heavy speculation. I don't really follow these or would recommend doing it. But I think that's what the draw is.
So you are long-term bullish, Ivan, but even you said with regards to NCLH, but really with regards to the market here, it seems like it's got a little bit ahead of itself. So how do you negotiate those two things, that you're bullish long-term, you're looking past the crisis, and yet at the same time, this rally that we're in feels a little overextended?
It is, and we could pull back at any time, but I think I view any pullbacks at this point as a buying opportunity. We're also going into the summer, which is, traditionally a little bit of a quieter time. The market tends to trade sideways and, create some trading opportunities. But I have been a believer in at least, if not a V-shaped recovery, a very narrow, tight U. And it may bounce a little bit, but I think that we are on a recovery trajectory. And so I stay bullish and, look to buy on the dips, leave a little cash for some opportunities, and buy all the good names that were on sale.
When you say you'd buy a pullback, like what does a pullback mean? What kind of pullback are we talking about?
I think I've been tracking when the S&P 500 was 28, 29, I thought a pullback could be to 2,600. Now I think that 2,800 is strong support. That would be a big pullback, but the S&P has just broken through 3,200. So I would say around 2,900, 3,000 would be a key pullback range. That would be significant, but I still like to buy. NVIDIA had a great run. It went to 365. It pulled back to just below 350. Now it's back to 365. And companies like Lumina, which are really both NVIDIA and Lumina, are being used to help solve this pandemic crisis by genomic mapping, which gives insight to the mutation direction of the virus and also the effectiveness of vaccines. So those are two names that I think will benefit or actually help solve this crisis.
All right, Ivan Feinseth has been on with us. He is a partner and CIO at Tigress Financial Partners. Ivan, we always appreciate your time and have a good one. And whether you're going out or not, I guess stay safe regardless.
You too. Stay safe, and thank you for having me on.
All right.
Thanks, Ivan.
8:49 here, guys. About 10 minutes left in our show. There's a few more things on my list and a lot of stuff from the chat today. So I want to try to get to some tickers from the chat. We were asked specifically in the Benzinga Pro chat about work, Slack
Okay.
work. This one is cooled off from where it had been. It was one of those, ridiculous run-ups here. It's off the highs, but give us some thoughts here, Joel, on Slack.
We've been talking about this one since the earnings crush, and you put a double bottom in at 30.52, 30.55, right? And then the third time down, they didn't wait for that. They went to 30.85 and they stepped up. So I mean, from a swing trade perspective, even if you're hopping in here at 31.50, 31.70, I mean, that's your bogey. I mean, the value, whoever wanted out got out. I think those 2 days, 91 million on the big down day, 37 million on the second day. So, everyone that's out of the pool, that wanted out of the pool is out, and I think you get a retracement here of this move. $32 is important. 32.29, that was the high. I think you break above that, and at least 33.60. You got a big gap to fill. It just seems like it had to sell off, off the earnings, catching its breath. I like this one.
You have defined risk, that double bottom from the earnings day, and then the next day, and even yesterday. You can almost call it a triple bottom. I know we're 30 cents away from it, but the stock's pretty choppy. 30.5. So I'd say under $30. I wouldn't want to own it, but right here you could make a trade. You could say, I think it's going to bounce back. We got, some of these lockdown trades are starting to come back into favor. Some of this growth tech is coming back into favor. This is the kind of environment that work can start to work in again, pun intended. So I would say under 30, I would be my out. So if I'm buying it here, I don't want to see it trade under 30, and I want to see it start to get out of here, because the longer it stays here,
exactly,
the more. So if it stays here again in this range and again in this range, it makes me think it actually might resolve to the downside. The longer they take to bounce is more likelihood that it's not going to bounce. I mean, and this one, I want to talk about this stock, and somebody asked me last night, look at this Upwork. I don't even know what to make of this UPWK. We had the big move. I'm out of it now. I was in it. I was in it for the move, and then I got back into a consolidation station, but it's hung out here too long, and it spooked me. So I actually scratched the trade. I was like, it's just been out down here. It's just been too long. So it's such a consolidation that I'm actually scared that, I kept thinking it's a consolidation to go higher, but because it's been like 15, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like 15 trading days in there. We're in this tight little range. If coil up is going to do something, but the longer it takes to bounce makes me spook that it's not going to bounce. So I don't know. I want to see Upwork go. I kept thinking it was going to go. I'm watching it closely, but holy cow, it just doesn't go anywhere.
I see the consolidation station here. I mean, 12. I mean, someone really wants to own this thing at $12. Look at those lows. Holy mackerel. Going back, going back over to 20 seconds. So hold on for that. Maybe give yourself a little bit of room. Maybe you need like an upgrade or something. I don't know how widely followed
it needs a catalyst. You're right.
Yeah, that's what
it needs. It gets an upgrade. It gets a downgrade. It's going to resolve the downside. It gets an upgrade. It's going to resolve the upside. It needs a catalyst. It's stuck. It's the big battle between the Bulls and the Bears here, and it's stuck, and it needs a catalyst to go one way or another. And I'd say go with the victor. If it starts to break down, you short the thing. It starts to break out. It goes 1260, 1270, starts to go. Then maybe you pay the breakout. So
what do they do again? I know you
tricky.
told me. What do they do?
It's like online freelancing.
I'd say it's a lockdown play. Like I kind of see it as benefiting from the lockdown.
Yeah,
I think that's why it had the big move up there, when all the lockdown stocks were going, and then you've had a cooling off period as obviously this reopening trade has taken hold. And it looks like the lockdown stocks are starting to show some life here again. Not saying we're going back into a lockdown, but any fear of us going into a lockdown will cause these lockdown stocks to catch a bit. So you don't have to go into a lockdown for the lockdown stocks, and the lockdown stocks we've been talking about, obviously the gamers and the online shoppers like Amazon, even Shopify. We've got a list, we've been talking about 15, 20 stocks that obviously, do well. Zoom at the top of that list that do well if the economy is in lockdown. There's not a lot of stocks that do well when the economy is in lockdown. That's the list that we've been talking about. So I tend to think that Upwork is a lockdown stock, and it's going to kind of move with those, but it hasn't caught a bid the last few days when some of the other lockdown stocks have been going up, and that's a concern as well. So it's stuck. Needs a catalyst.
RCA in the chat, remembering that the chairman was on Kramer back in early May, and that
was a catalyst too. And like I said, love him or hate him, Jim Cramer is very influential. On Zoom Info last night, which is now trading $55, it was 50. Kramer mentioned it and said it's undervalued, and it's 55. Kramer in this market right now, I'm going to say it, Kramer is more influential than any analyst out there right now in this market. He can be more influential on everything because the analyst coverage is just on certain stocks. Every analyst is covering, like Ivan's only covering, 10, 15 stocks. Kramer's talking all markets. He's moving stocks all the time. And, and he's not one, people say he's talking his book. He's running a charitable trust. He's not doing anything, of that nature where he's trying, to move his stocks higher. If people say that, it's ridiculous. I respect Jim Cramer very much. The person knows so much about every company, fundamentals. He throws in the technicals. He'd be one of my heroes. I love Jim Cramer. He's funny as hell. I mean, everybody, you think about, and then, the influence that he has is just incredible, and you have to respect that influence. So love him or hate him. What I'm saying is you have to respect his influence. When he says something, it will move the price. And if you're day trading and you're trying to fight Jim, a lot of times, that's going to be, if you were trying to fight Zoom Info saying, well, 51, 52, this is ridiculous. It's 55 in your face. So you've got to respect that they move stocks.
I want to do Chewy real fast before I forget, because
How'd Chewy do? I'm really curious on this one.
Shoot up the earnings, but the stock didn't
Yeah.
respond.
I will show you. Q2 or Q1 EPS last night, 12-cent per share loss versus a 16-cent loss estimate. So they beat that estimate. Sales 1.62 versus 1.53 billion dollars. So beat and beat for the Q1, and they set the bar high for themselves for the quarter and for the year. They gave Q2 and fiscal year sales guidance that both came in above the estimate.
Throw out the high, throw out the low. What are we down 55 cents? I say you got to get green in this one pretty quickly. 51.51, that all-time closing high. You get green on this one. You start to roll north, take out that all-time high. Pre-market high was over $53. If this thing doesn't get green real quick, I could see some profit taking in this one. I thought it would move more. Straddle riders or straddle buyers are probably getting whooped on this one. Major support, and I'm talking major support at $48. So that's what I'm looking at in Chewy. Dennis, any thoughts on that issue?
Next.
You can just tell some stocks Dennis just does not care about. And
It's had the move. It's benefited.
Yeah, I can't
I'm
buy
gonna
it.
just from a fundamental basis, and obviously fundamentals don't matter. I mean, they're kicking butt and taking names probably because they're in a lockdown. Well, people aren't going to the pet store; they're ordering on Chewy. So what happens when they start going out again? Eventually, the money maybe starts to flow out of this thing. This is the same as Peloton, really. I mean, it's a similar trade, just different product, where everybody's staying at home. The Peloton's a pretty good alternative when you're in a lockdown. Chewy's a lockdown stock. Peloton's a lockdown stock. So if we go back to the lockdown, these stocks will catch a bit. If we start looking like the reopening's going well, money could come out of these stocks.
All right. Don't forget, we do have a Fed meeting / press conference today.
What time,
Same time as always, and 2:00. And
same bat time, same bat channel.
I mean, Joel said it yesterday. We know what he's going to say. They're going to say they're data dependent. They're probably not going to make any changes to the interest rate policy or anything like that, but they'll try to give guidance best they can, but that could move the market this afternoon. So keep that on your radar, everyone.
I will.
2 minutes left in today's show. I apologize. There are so many tickers in the chat. Can't get.
All right, let's do. You guys, Joel likes this. So okay, let's do two more stocks. Two more. Pick the tickers.
Oh man, there are just so many. Okay, let me just
random
and close my eyes and Winnebago here. This came up. WGO.
The reopening trade of the year really went from $20 up to $68. Thor Industries, same thing. Both of these stocks just benefiting that nobody's ever going to go to a hotel again because we're all going to buy Winnebagos and we're going to stay in those. And then we have our own germs. We don't have to worry about other people's germs. So it's benefited significantly. These are classic reopening trades. Long in the tooth. If you're buying it here now, you are not even late for the party. The party is almost over. So I would ring the register. Yes, the trend is your friend. Yes, it could continue for a bit. But these trades, in my opinion, are very long in the tooth. And if you're buying it here, this is the absolute definition of chasing. But you still have the trend in your favor. So
you want to hear something?
Maybe keep riding the trend. But if you're coming and putting new money into it here, I think the new money was to be put in 2 months ago.
You want to? Are you sitting down? You want to hear something?
Yeah. What do you got?
Lisa wants to get like one of these vehicles.
Want to buy a Winnebago?
Yeah.
I mean, I get it. Why not?
But
I get it. Gas prices are a little bit cheaper.
We are taking pre-market prep on the road, folks.
It makes sense. I mean, it totally makes sense. It's not absurd that they got these moves. It makes sense. People are nervous. And I was saying reopening trade. It's actually not a reopening. It's a trade that it's actually not a reopening trade. It's actually a trade that's benefiting simply from the hotels being, everybody thinks they've got cooties. So for lack of a better word. So people aren't going to want to go to hotels as much. So they're going to buy their Winnebagos and Thors. I just think it's extended. It's too overextended for me to come here.
All right, Joel, just say the word and we're taking the show on the road.
I'm like, well, who's going to drive it? Because I just,
You and
parallel.
I can rotate.
Joel, you could drive that.
No, I could,
Can
parallel
you park
parking.
it is the question.
And then hook
Oops,
it.
sorry about that. I just got your tail light a little bit, but it's okay.
Yeah.
Look out, Mr. Elconin's on the road here. He's coming down. A lot of weight.
Yeah, and hooking that thing up, and you go to these
You could
places.
do some awesome tailgating with that thing, Joel.
Yeah.
I think you should get it. Me and Spencer will even ride with you. We'll take the Joel or the Elconin cooties even into consideration. We want to go for a ride in the Elconin Winnebago.
For sure.
We'll put the license plate on spoos.
She also mentioned the kayak. I think I'll just go with the kayak. That'd be a little bit easier to navigate than
that's fun.
that. But
all right,
we had one more stock. I promise one more.
Okay, one more. Let's look at Workhorse WKHS. This is from
Who gave this stock yesterday? And who gave this?
Mitch Hotch, I believe.
Mitch gave this in the chat yesterday.
Yeah.
I'm gonna tell you, I read the chat sometimes. I looked at the setup. I was like, that's a nice setup. I saw this about 10 o'clock. I was rereading the chat because I was just getting done with my day trades, and I was looking through the chat, and I saw it. So this was Mitch that gave it yesterday. Somebody gave this stock yesterday. So whoever's giving it today, maybe it's the same person. I bought the stock at $3.35. So if it was Mitch that gave it yesterday, thank you very much. It was it was just a clean setup. I'm like, electric vehicles, the story could get hot again. I'm still long it right now. So full disclosure, I am still long the stock right now. And I was immediately up like 13% net price from yesterday. So thank you very much, Mitch, if you were the one that gave it yesterday. I obviously am bullish the stock. I'm still long it. So I'm sticking with it. It's a swing trade. I think the story could get hot.
Wow, I did not expect that coming. All right. It's good to know.
That was a good tip from our chat trader yesterday. If it was Mitch that gave it yesterday, if that was you, good job.
It just goes to show you never know. Drop a ticker on the chat, and
I look through. It's ideas. Our chat, our traders are very. We have some very good traders in our chat, and I get some fantastic ideas from the people in our chat. Some fantastic ideas. So I always leaf through, and I was like, I look, and I'm looking for ducks in a row. I'm like, oh, that's a stock I haven't thought about in a while. What's it doing? And I look at the chart, and I'm like, oh, it kind of looks like it wants to break out. So, and obviously, if we were talking about it on the show, maybe I would have talked about it and said I liked it then, but I didn't see it till 10 o'clock. It wasn't on the show, and I looked at it. I was like, I like that chart. And I bought it at $3.35. It's $3.85. I mean, I'm up 50 cents on a $3 stock.
Surprised you're not out of it in short.
I designated it swing trade, so I did designate it.
Okay, we know how long that lasts.
Yeah, well, we'll see if it starts to go crazy. When the things go up like 20-30%, I can't help but ring the register. It's just in me. I never, I'm not very
Scalper
good.
blood.
Scalper blood, Joel. I gotta take a knife, gotta poke my finger, and I gotta squeeze that scalper blood out of me. But I'm trying. It's hard to do.
Hey, Spencer, just real quick before we wrap, due to popular demand, I went back on Hot Mic yesterday, and I'm going to hop back on today because we're getting so many issues that we're not covering here. So after we sign off here, join me on hotmic.io, Joel code 317. And I'll try and cover the issues that we missed on the show. Who's our guest tomorrow, Spencer?
It's a great question, as always, Joel. Tomorrow's guest is Mark Chaikin. He would join the show. He joins us every other Thursday.
We love Mark.
And so seeing a lot of questions in the chat about Benzinga Pro, how to get it, how much it costs. There are different pricing levels. There's a link in the description of this video on YouTube. Go into the description. There's a link to Pro. That link will get you a free trial and a discount should you choose to continue that trial. So the link is in there. Pro.benzinga.com is the main site, and there are different levels of the subscription that you can check out there. I want to thank our guest today, Ivan Feinseth. Thanks to Ray Mack in the YouTube chat, dropping us a donation, which you're always. I'm not gonna.
We got a donation.
I'm not gonna say don't donate, but yeah, Ray Mack in the YouTube chat dropped us a little small donation today.
A little tip jar, eh?
A little tip jar.
How do we get those tips?
That's the first one ever.
No, we had a few.
It's not the first one.
Oh, really? You guys didn't tell me about it?
They just don't give us the tips, Joel. They just keep them.
Yeah, that's why Jason says hits the like on YouTube. They're probably making a ton off the YouTube.
We don't get those tips. It doesn't appear, but
no comment. Okay.
No comment. Spencer's like, cha-ching, cha-ching.
Oh, look at Spencer.
I know what
He's gonna get a new car or a new tire. He needs a new tire because he got a flat tire.
There you go.
So,
Give it to Spence. It's okay. I don't need tips.
All right.
I get stock tips. I get tips like from Mitch there on that on that workhorse. That's the best tip I can get.
buy sheep, sell deer.
Okay. All right. Please remember that all the
We better stop this show. This is
from
just
our
getting-
show is
going
meant
off
to
the
be
rails.
as informational purposes, not for investing or trading advice. Don't forget to hit that like button, subscribe to our channel. Thanks everyone for joining us. Joel and I will be back at 3:40. In the meantime, have a good rest of your Wednesday, and wherever you are, stay safe.